I won't ask you to sort of read tea leaves out of the People's Congress, but you watch China credit. Are they more incentivized to close a deal now or not?
Well, there's enough weakness in Chinese growth, and there's considerable incentive for China to do everything to bolster growth, whether it be on the monetary front, we're seeing there on the fiscal side of things, and therefore anything on the structural side that can help on the trade side, absolutely. They're definitely incentivized to do a deal.
But what costs them more, paying tariffs from here until infinity or changing their entire economic model?
Well, I think there's some red lines in terms of changing their entire economic model. I think the idea of providing underlying support for state-owned enterprises, providing some support in strategic areas, notably the military, those areas are red lines effectively. But in the other areas, and you heard about things like joint ventures, at least paying lip service to providing protection for intellectual property, those things I think you can get some real movement forward.
So now that we have some actual numbers, Jeff, you know, Chinese stocks were the world's biggest losers last year. So far this year, they're the biggest winners. Do you still buy?
No. I think markets have gotten a little too excited that this trade deal means a rebound in growth in China. Trade has not been China's problem over the past year. Actually, the latest numbers we have through January shows Chinese exports are up 14% year over year. That's faster than their overall economy. China's slowdown was internally driven based on a tightening of credit to avoid these zombie cities and bridges to nowhere and the building of this debt mountain. What they're trying to do now is implement Western-style stimulus in the form of tax cuts. It may work, but there's no sign of that yet. China's economic surprise index continues to come in negative, meaning economic data continues to surprise to the downside despite many months of tax cuts now, just not showing up yet. So I think it may turn around maybe later this year, but the bet that it's already a done deal just on a trade deal, I think is getting too far ahead of itself in China.
So you don't buy the argument that if they get a trade deal done, the manufacturing numbers, for instance, which have been contractionary, will start to turn around, and that'll boost overall growth?
You know, sentiment might get a little bit better, but we've really not seen a slowdown tied to trade. Again, many of China's Asian counterparts have picked up where trade with the U.S. has slowed a little bit. Again, 14% year-over-year export growth. I mean, maybe that could get a little bit better, but that's not really been the drag on the economy. It's been internal spending, government spending on state-owned enterprises and infrastructure programs, and that's not really set to turn around, at least according to the National People's Congress, which we've just seen laid out for 2019.